Can an investor withdraw money from mutual funds anytime? What are the factors should we pay attention before withdrawing money from mutual funds? Let's find out through a detailed analysis in this video. Can we get started? There are two categories of mutual funds: open-ended mutual funds and closed-ended mutual funds. Closed-ended mutual funds have a lock-in period and they can only be withdrawn after the lock-in period is over. There is no option to withdraw in between, but if you are desperately in need to withdraw money, then it can only be done when the closed-ended funds are listed and traded in the market. If we take the case of open-ended funds, they can be withdrawn whenever you want, but there is an exception. And what is that? ELSS. ELSS has a 3-year lock-in period because of tax benefit constraints. And after the 3 years is complete, you can withdraw money whenever you want. Except for ELSS, all open-ended funds can be withdrawn anytime. So now we know when we should withdraw a mutual fund. But can you withdraw it just like that? What are the things that an investor should keep an eye on before withdrawing money from mutual funds? First and foremost, you have to see the exit load of the fund. What is exit load? Exit load is similar to the charges that we pay when we surrender mutual funds. But it is not as high as ULIPs. It is a very nominal 1%. And that too, only when you withdraw within 1 year, the exit load will be charged. There is no exit load if you withdraw after 1 year. So for example, if your 1 year period is going to get completed within a week, it is a wise decision to wait a week and withdraw your money to avoid exit load. What is the second thing that you should make a note of before withdrawing? Tax liability. If it's an equity mutual fund, you have to check whether it's a short-term capital gain or long-term capital gain. And if it's a debt fund, you have to check which financial year you are going to withdraw it. Because in the same financial year, you have to add it to your income and pay the taxes. So for example, equity mutual fund is eligible for long-term capital gain after 1 year. If there is only 1 month left to complete your 1 year period, like I said before, it is better to wait. So capital gains tax is a very important factor to remember before withdrawing your money from mutual fund. The third important thing you should look for before withdrawing your mutual fund money: whether the fund is in profit or loss. So if a fund is currently not doing well due to market fall, you can wait and look whether it will do much better in the future. And you can withdraw your money then. Now let's imagine a scenario. You have 10 lakhs in your portfolio and have invested it in different schemes, but you want to withdraw just 1 lakh. What should you consider? This is a very important thing to remember. Withdraw from a scheme that is underperforming and don't withdraw from a scheme that is undervaluation. Why I am saying this is that undervalued stocks can go up anytime and fetch you hefty returns. So don't withdraw from a fund that you will think do well in the future, and withdraw from a fund that you think is going down the drain. I hope that this has cleared all your doubts regarding withdrawing your money from mutual funds. Let's meet again in another video. Thank you. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free and you can find the link in the below description. Please like and share and do subscribe to Holistic Investment.